Into the program, a good friend who's been here before, Paul Schatz, Heritage Capital President. And it's good to see you, Paul.
You too, Adam.
Before we get talking about all of these issues, I want to play a soundbite from our discussion with Gary Cohen last week, in which he said it would be okay to raise the corporate tax to as high as 28%.
I'm actually okay at 28%. The level we got to in our tax plan on the corporate side was actually a bit lower than I thought we needed to go.
Paul, I got to ask you, because Joe Biden's talking about raising it to 28% if Biden wins the presidency and if he can get that through Congress. What do you say?
Well, first, is Gary Cohen a hypocrite? Because when he was in the Trump administration, he was one of the biggest proponents of cutting the corporate tax rate down to a 21, 22%, and maybe even lower. So I think it's, for me anyway, this is all populist nonsense. You cannot argue that a higher corporate tax rate is better for corporate America. You can't argue that. There's absolutely no evidence, no data to suggest that's better for the markets. So no, I totally dismiss that. Now, you want to say that we need the money more than the economic stimulus. You want to go down that path? I'll have the argument, but no, the lower corporate tax rate flat out makes us more competitive in the world economy. And at least for me, that's most important.
So, Paul, having said that, I mean, part of the discussion or part of the reason we're having discussion of raising taxes is largely because there are concerns about the debt piling up. I mean, we've talked a lot about the stimulus as well as the CARES Act. I guess the broader question is, what's the reckoning waiting on the other side, and how do we pay for all of this?
Flat out, we can. You could tax every individual making $500,000 and over at 100%. You'll never make a dent in the national debt. It is now fiscally impossible. It's impossible to ever pay down the national debt the way things are. So our economy is too mature to grow our way out. And the reason why it's not an anchor like it would be in Argentina or other countries, because the world has to transact business in dollars. So we're the world's reserve currency. Until or unless the world loses faith in our currency, we can continue to run up these unfathomable debt levels at some point down the road. And it's not in the 2020. This is down the road when I may be retired. Adam will still be here, but I may be done.
Paul, I got to ask you, because everything you've just said, okay, let's look 10 years down the road. If we're not the reserve currency, if we can't grow our way out of the debt, what do I do as an investor? What do all of us do? Because everything you're describing, I would think, is bad news, whether you're going into fixed income or even equities.
Well, so before you conclude that, look across the world at Japan, because the Japanese government essentially owns their bond market. And before all said and done in the 2020s, the ECB is going to own the European bond market. They may come out with just perpetual bonds. And I hope we don't go there. I hope we're at least smarter and learn our lessons from the problems in Japan and Europe. But clearly, we're heading down that path. I don't think there'll be any doubt we'll be the world's reserve currency 10 years from now, to your point. The Fed cannot, the Treasury, they cannot allow interest rates to go up, because we could never, you would get into this vicious cycle of having to print more and more and more to pay for it. They're going to keep rates artificially low. I'm going to guess at least to the end of this decade. It may not be zero, but they're going to keep notes and the long-term bonds super low, and they may come out with a 50-year bond, or even on the unthinkable, a perpetual bond.
But Paul, when you think about the nature of this financial crisis, I think it differs so starkly, even looking back to 2008, 2009, because China sort of led the way out of that, even if the US was struggling. As you look at our global economy right now and the potential markets to invest in, are you seeing opportunity elsewhere, or do you feel like the virus has just completely decimated any of those prospects?
Oh, no. So first of all, the longer term you look, the more bullish I'm going to be. I think we'll see Dow 40,000 in the next couple of years. there's always an opportunity. People think it's like red light, green light, investors do. People should realize there's always an opportunity. Gold, look what gold's done this year. And people say, well, that's just for the people who want to buy bottled water and spam and sit in a bunker. But gold has its place in the investing cycle. There's always opportunities. You're starting to see, we saw shortages in the economy during the pandemic. I think that may be a theme for the 2020s. Shortages perhaps in areas we've never thought about, maybe in the grains. But we own a good chunk of China equities. People should not put China on their DOA list as dead. That economy is far from dead, and I'll certainly argue that it will be the leading economy, if not this whole decade, for a good portion of this decade. Don't count China out economically or market-wise.
Paul Schatz, always good to have you here. Heritage Capital President, we appreciate your joining us on The Move.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.